You know better than me, I don't care about the current quarter because it's over. I care about the future forecast, and that was a disappointment. Do you agree that that forecast was disappointing?
Well, Taylor, everybody was looking for this quarter, which is their fourth quarter 19. They have a different fiscal year than calendar year, to kind of be the low point in the valley. And that guidance going into their upcoming first quarter for 2020 would show some sort of improvement. Now, they did, as you talked about, revenue of about a little over $4.8 billion. On the fourth quarter, they guided for $5 billion plus or minus $200 million. So that kind of puts you a little bit on the high range from that perspective. But I think the real thing to focus in with this Micron report was that GAAP gross margin came in at 28%, and they guided for 24 to 27% gross margin going into the first quarter of 2020. So what it leads us to come to the conclusion is, like you were saying, is that everybody was looking for this to be the bottom of the valley, and then we're going to start going back up the staircase starting in the first quarter of 2020. And unfortunately, based on the guidance, it kind of looks like it's going to be somewhat flat or about the same, or even slightly down in regards to gross margin. So I think that's what really disappointed people in terms of the headline news coming out of Micron.
Dan, I want to show a chart that I'm showing to our Bloomberg audience inside the terminal that I have here at GTV Go. And interestingly enough, we talk about NAND and DRAM memory chip prices. And this is really, frankly, why the analysts were so bullish coming into this quarter, because we thought NAND and DRAM prices were bottoming out. Does the Micron earnings suggest that perhaps that call was too early?
You know, Taylor, I think it might be, just because, as you mentioned, we've seen DRAM prices in the last quarter were down about 9%. So that's total DRAM revenue. And as you mentioned, you know, it's kind of ticking down from what we saw over the last, let's say, 4 or 5 quarters. And then the expectation, as you mentioned, in terms of analysts, was it's going to start to pick up again. And at least based on the remarks that we have coming out from Micron that they had with their results, it's not showing the type of improvement that we were kind of hoping for. It's kind of just showing, you know what I mean, a continuation of kind of the same, a lot of uncertainty around tariffs and Yahweh and so forth. So because of that, I think maybe you could make the case that analysts were a little bit ahead of themselves, maybe a quarter or two, in terms of predicting that inflection point, and things are going to really start taking back off again.
What is the bottom line impact from trade and tariffs?
Well, Taylor, in the release, they talked about the relationship with Yahweh in regards to concerns about getting an approval from the Commerce Department to continue to sell into that company. You also have to realize that, you know, Micron Technology, of all the semiconductor stocks, derives about 50% of their revenues come out of China. So they are very, very heavily entrenched in that debate. So because of that, that is just a huge headwind for them in regards to being able to recover, along with the fact that we have a very mature cycle in smartphones and PCs, and we have a little bit of an indigestion going on right now in the infrastructure as a service cloud space. So you have all these things kind of coming against them, but obviously China and tariffs are a big part of those headwinds.
Dan, we sound pretty negative on the company, but when we expand out and look at the general chip industry, I am shocked at the relative resilience. If we take a look at another chart here that I'm showing on my Bloomberg terminal, it's the fact that DRAM prices, like you and I have been talking about, have been bottoming out, but the SOX, the broader gauge of all those chip makers, has just continued to climb. Are you surprised at the relative resilience of this sector?
What's amazing, Taylor, is I think, and you have the numbers in front of you, the SOX, I believe, is up 36% year to date, correct? If you look at the overall technology sector, it's up about 28%, and both those numbers are double, right, the S&P 500 and the Dow Jones, right, in terms of performance year to date. So you're right, there's just a tremendous anticipation that things have bottomed and things are going to start improving. So you have this huge run-up in the SOX, and believe it or not, it is higher than it was before we hit the peak, and then we dropped down as of last summer when we had kind of this pullback from China and everything else. So it's interesting, the enthusiasm for the sector.